Yo, how you doing, man? Oh, you're muted.
There we go.
Issues, you good?
Yep. No, I'm looking forward to this week actually. I'm back to
Yeah, you're back now, aren't you?
CPI as well. Watch out for that one. I love
Say again.
CPI's around the corner, you know? So it's
Yeah.
a major news event. Today we're talking about how to trade the news, funnily enough.
Yeah, exactly. Yeah, it's a good time to do it. I can't hear you very well, Diego.
Okay, I feel maybe my mic's connected to maybe another software.
Okay. Yeah, it sounds like you're really far away.
Yeah. Just introduce everything while I try and figure this out.
So, welcome back, guys. Welcome. I apologise for my very hairy appearance today. I'm overdue my beard trim, so tomorrow is the day where we get all tidied up. So apologies in advance. Lawrence, welcome, dude. Good to see you, man. Good to see you. Who else have we got in the chat today? It'd be great, guys, to get some questions for you all and start putting in the chat what kind of pairs and what analysis you want us to look at for you today. Order of the day, really. We'll go through kind of the forecast for the week. Diego and I will talk through a couple of pairs that we are thinking maybe particularly good for us to have a look at, and forecast what we expect to be happening. Obviously, we've got news this week as well. Topic of the day is our, how to trade the news. So Diego and I probably have different ideas on this, on how we trade the news. I have specific trading strategies that I use for the news that I can kind of talk you through today. I used to get really, really scared for news days, but nowadays I love it.
This is different, isn't it? I love news because it's so. I find trading news easier than trading the normal markets.
100%.
It's just so easy and it's simple.
You've got volume and liquidity in the marketplace. It's the two things we want, right?
Yeah, exactly. I've got two strategies for the news. I've got limit order, but it has to be. We'll go into detail after. Yeah, I've got a limit order where it's normally news has to be really far away from price, so it can trigger you in. Never trade it where it's underneath unless it's a breakout. I do have a little breakout strategy on the M1 time frame that plays out very well. It literally has like a 95% win rate. I can share it on CPI if you guys want.
That's amazing. That's really
cool.
You
need a raw broker, a raw spread broker. Otherwise, nah.
Yeah. Right. Do you trade pre or post news?
I trade. I do both actually. Whichever.
Do you?
Yeah, whichever. I prefer trading. I like catching the limit order. I like the news to trigger me in on the limit order, but sometimes there's setups where a clear setup comes before the news and you take it, like NZD CAD. That's actually valid right now for a good long. It depends on what news as well. If it's CPI, I like to get triggered in on the spike. So CPI will go in one direction, but then I'll catch the spike at the very, very top and I'll do a full retracement. That's how I basically catch it. But NFP and FOMC, I like trading it after the news. So normally there's a liquidation, then it ranges, then it liquidates another high, then it ranges, then it liquidates another high, and then boom, it drops. I don't know. It just kind of depends. So excited to share it. Diego, the new sniper. I'll show you the techers, Lawrence, if you send me a DM. But if you've got you have a personal account, don't you, Lawrence? Just make sure it's a raw spread. Otherwise, do not attempt it at all.
Yeah. I think for most new traders or newer traders, those of you trying to find your profitability, you are probably better off waiting until after the news event because you need to learn. Like Diego's clearly got a very good knowledge of how different news events move, and that's really important to have as well, so that he can trade accordingly alongside them. And I think if you're not sure about how to trade the news, don't trade before the news. If you are in a trade before the news hits and you're at break-even point or you're pretty close to your stop, it's probably advisable to close the trade before the news hits. You may miss out.
Sorry, I'll let you finish.
I was going to say you may miss out on a really good move, but you may also miss out being being what's called slipped. Now, this can happen quite a lot with news events so when a stop loss order is triggered, it's exactly that. It's an order to trigger the stop loss. So if you're in a sell, it's a buy order, and if you're in a buy, it's a sell order to take basically the opposing trade out of the marketplace. But when news hits, because they can move quite wildly, then there's lots and lots of orders for the broker to trigger all at once. And sometimes it can't do it, which means by the time it's triggered your order, price is a lot lower or a lot higher than your stop loss. So it's stung me a couple of times in the past where I've been, say, in a trade and I've got a 1% risk on it and I've been stopped out for 3%. So it can happen. And Diego makes a point about, brokers with kind of raw spreads and things like that, they would definitely be better in that scenario. But if you get a particular big move, like on Friday, we had it with NFP. So there was a massive move. I'll show you. I'll jump over to the charts quickly.
There's Euro USD. I done a live stream for my members for Euro. Basically, just told them it's going to reverse from it. I told them I'm not going to trade. I'm not going to trade until this week. I stayed to my word. And the entry was amazing. It was a 10R in so quickly on the Euro.
On Friday?
On Friday, yeah. I took
I don't really. Were you in a buy or a sell? Did you sell down from here?
It was a sell. It was basically a sniper up there somewhere.
After the news?
After I got triggered more or less on the news.
Yeah. So it had been down from there.
Yeah, so textbook.
Let's say before the news hit on Friday, okay, you're expecting longs, okay, and with how bearish the dollar's been, then that would make sense. Okay, maybe you get into the trade like that, for example, and you want to target, anywhere like that sort of stop loss. What happened when news hit is you had this massive spike. So I know, and I'm pretty sure with a lot of brokers, you'd have been slipped there. And I know traders that got slipped on Friday for that very position. Your trade was correct. Your trade was accurate. Your direction was correct, but NFP has a habit of doing this, and obviously it's swept all the way down. It's taken out liquidity below here, tagged into this order block here, okay, taken out that liquidity and reversed, then pushed back up, and then it's giving you, looks like Diego probably got in somewhere up here. For me, I would have waited a little bit. We'll go through the strategies in a little bit, but I would have waited a little bit for some of this bearish momentum, and I would have traded the opposing side of that, what I would call the trap. So, that's a perfect example of how you can get slipped in the market, because all of that movement here, that's all happened in 60 seconds. And so it's a massive down before a push up probably within seconds ultimately. That bit, I don't have the seconds charts unfortunately, but that bit would have happened within 10-15 seconds, I reckon. And your broker it'd be unlikely that your broker would have been able to catch up with all of the orders in that moment. So you'd have probably got slipped. Where are you? Where are you? Sorry, you were saying as I was talking there, you were about to say something.
I lost my train of thought. What was it going to say?
Welcome, Anthony. Good to have you on the chat. Have you been on before, Anthony? I'm not sure you have. I don't recognise your logo, but if you have, welcome back. And if you haven't, welcome. Good to see you.
Welcome, guys. I forgot what I was going to say. I lost my train of thought, man.
Okay. What have you got on watch this week?
I literally just spent like an hour doing a forecast for my members into great detail, and I managed to get a watch list of 3. So I've got Kiwi CAD, Dollar CAD, and AUD USD. Unfortunately, there's no Euro, and Euro is my favorite market, but there's too many contradicting patterns. I'm not going to trade it. I'll share my screen and briefly just cover where we are.
Yeah, dollar's definitely got some decisions to make. We've had like a nice push. We had a nice push up on dollar, And we could be getting some bullish price action now, but I haven't quite got my confirmations yet. Obviously the reverse then for Euro USD, where we could be going short from here, but it needs a little bit of development yet, really, for me.
100%. It's funny because we have like the same conclusion but different strategies.
Yeah,
but I'm the same. For me, is in the middle of no man's land. It's in the middle of two patterns, but you know where it's going, but it's not confirmed. It needs time to develop. So, but short term is for me is bullish, but there's no setups for me.
Yeah.
To be fair, and if I quickly share my screen for the euro, where we are, boom. This was the trade from last week that I gave to my members. Took it on the demo, but I'm very disciplined. If I say I'm not going to trade, I'm not going to trade. But this would have been a bloody comeback. Where was it? So I've done the live stream here on Thursday around the same time, around 11 a.m. And obviously this is an obvious liquidity right there, right?
Is your chart inversed?
No. So I'm looking at the euro. This is euro, the one out on Thursday, by the way.
Oh, on Thursday. I was going to say.
Yeah. On Thursday.
I thought it was a live chart. I got well confused then.
That's how I know you know your euro, because it looked weird to me. This is a setup. 3, 4, 5, and then 7. Down there we go. And you can see I'm looking for the fake out of the third tap. It was quite textbook, to be fair. You can see the third tap there. For those of you who don't know, I like trading the third tap fake out. 1, 2. As long as it's above liquidity, third tap fake out to a point of interest. I use an indicator here. That is private knowledge. But essentially, I don't know who caught the trade, but that was a bloody good signal for the members. And then if I fast forward it, this is NFP last week, wasn't it?
Yeah.
So if we go to NFP, Friday,
1:30.
1:30, yeah. So we got boom there. So the next candle is basically gonna go long, right? And this is how I like trading the news. My order has to be way far off from NFP. If this particular price action was up here, no way I'm taking that.
No.
I would rather I just won't trade because I know I'm expecting a drop, right? Unless let's say NFP shoots up and then it messes around, goes low again, and if it doesn't have a pullback after taking this stop down, then I'll be looking at this liquidity hunt. But again, NFP is very choppy compared to CPI. So with this particular trade, what happened? There we go. Kind of got triggered and really, really quickly then. Beautiful little trade there. There's your pattern. Third top of the fake out on this particular setup. 1, 2, you get your boomerang. 1, 2, and you got your boomerang with that trend line and the point of interest above liquidity. So it's really, really, really straightforward, to be fair.
Yeah, nice. Did you catch it, or were you not trading last week? So
I called it a demo. I wasn't trading last, so I did catch it.
Yeah.
It was a lovely little trade.
You came out 1 to 4, did you?
Came out 1 to 4 and I left some running.
Yeah.
And then it just continued, 1 to 4. And then after it went to the next take profit, which is 10R, then it's just gonna keep on dropping, to be fair. But I'm expecting it to continue dropping.
Yeah.
Towards these point of interest. So I've got two setups, 2 scenarios, which I went on 2 different accounts just to spread the risk. So I'm expecting Euro USD to go long. At the moment, it's not really ready yet. That's what I'm personally anticipating. In terms of the DXY, this is to expand in. So again, this needs time to develop. But the same scenario is happening. See that? Liquidity, 1 tap, 2 tap. I'll use the indicator that I have, which I'll put on after the live stream. And that's a potential point of interest. So it's kind of the roadmaps laid out. Same thing happened in the euro, where, but on a smaller scale, there was liquidity here, third top of the trend line. Same thing on the DXY, liquidity, third top of the trend line. So yeah, I'm expecting it to push up. Hopefully for me, if price just remains around the middle of the pattern, I'll be very confident in trading CPI, because it'll just shoot up, potentially drop. There's a high here that's tricking traders with their stop losses above, but they now enter on this scenario, and there's normally a full retracement anyway. So that's what I've got for the DXY. However, if it doesn't go to that point of interest and it drops to the downside, then the limit order below this liquidity would be ideal. However, there's still a lot of room to the downside because of this unfilled Elliott wave over here. So I'm expecting shorts on the dollar. It just really just depends on the actual day. So that's what I've got in terms of the trades that are ready now. Where we at? Keep CAD. Liquidity there. It's a nice little pattern forming. This still need time to develop. There's already a fake out of this pattern. You see that? 1, 2, 3.
Yeah.
So potentially a reversal from this pattern's not really ready yet. Hold on. There we go. Thought it was ready because I've done it on Marva analysis. And then we do have some liquidity down there. Potential long, basically, right now. It's a nice little trade prior to the news. And we'll be targeting start of the pattern and then liquidity outside of the pattern. That's inside of the pattern, so ideally I'll be looking at this actually. That's fine. So there's actually a nice little trade here. Everything I just said, and with the way I trade, and 1, 2, stop hunt. 1, 2, stop hunt. The only thing is, normally there's a clear area of liquidity over here. So that's going to reduce the probability. If this particular liquidity was over here and then it liquidated this is basically more or less a full checklist. And this is the basic foundations of the strategy without showing all the indicators and whatever nonsense. Yeah, so ideally I would like this area to be filled, but this is a valid trade. And that's a Kiwi. Dollar CAD is interesting. All the other pairs are contradictive patterns. It's a bit messy. Euro for me is a little bit messy. I'm not too sure with the euro. But if I kind of, yeah, it's just in the middle. I just don't like it. Dollar CAD. Dollar CAD. Yeah, dollar CAD's got a bit of a storyline happening. Okay, so let me zoom out to the weekly. This is a picture. So this is the major liquidity, and this is well, right? It's kind of stuck in that range. On the daily, this inner fractional liquidity has been taken out, right? Because we can see this particular leg, right? From here, that leg, the top side of the liquidity has been taken out. So there's a good reason for it to retest this area. So it's just something to have at the back of your mind. Now, in terms of the patterns and everything, there we go, just about formed the beam around. 1, 2, 3, 4, 5. So at the moment, we are technically bearish on the CAD based on the pattern. So I'm expecting the dollar to drop. That's what I'm personally anticipating. In terms of Elliott waves, with the current intersecting pattern, there's still nothing really here. Although this looks like it's ready because of the there's been a third tap fake out, right? From this pattern, if you guys can see it. 1, 2, but would I trade this? Why would I trade this, or why wouldn't I trade this? Can somebody answer that one? Or can you, Chris?
It looks like it's quite like wedgy in its formation, right? Don't you want them more as like a channel?
Yeah, exactly. It's just way too. This side is too wide. The angle is too wide. It's not consistent. I trade the same pattern over and over again. This is obviously just going to be invalid, right? And this is why I like using liquidity, because when you have liquidity, it's going to give you a clearer pattern. So even if it does come up here, at least that would be a correct pattern, a correct wedge, right? That's a valid setup. But most importantly, I do prefer taking trades that are, I want it to be near the 50, because the 50 is not consistent. Hold on. Fibs, is it all fibs? There we go. So yeah, they can go above the 50, go around 61, 67, that area. I would rather use this area of liquidity. So this one I'm going to ignore.
That makes more sense. You know, if you use your premium discount theory as well, you know, we're clearly in a bit of a pullback now, right? So, you know, logically, where do investors want to be loading off their buy positions? Well, they want to be loading them off in a premium pricing, so above that 50 level. And where they're going to be then lumping in more sell orders, again, above that 50 level. So
above 50, exactly. Near the golden ratio. It's very consistent. It's why I used to trade back in the day anyway, Fibonacci.
Really then, I mean, just based upon that pair really probably this week, unless you get some really big moves with the news, is probably bullish, right? Short term.
Short term, yeah. I mean, this is the daily time frame, so yeah, this is definitely, definitely bullish. So if there is a setup, if I were to find a setup today, I know that I will, because I'm technically forcing to trade. I'll never do that, but this is so messy. I need patterns. Patterns for me in Elliott waves, it gives me structure and it gives me clarity, in terms of where liquidity is going to go to, or how long it can take. I can't just trade liquidation.
It's your filtering process, isn't it? Ultimately.
Exactly. I use it to filter out the liquidity.
Yeah. Every trader has to have, and that's what their strategy is, right? It's a selection, it's a filtering process. Yours is your Elliott wave cycle, so you're waiting until certain areas on the Elliott waves are signaled. That's your edge. That's where you've learned your edges in the marketplace. For me, I'm looking for specific liquidity levels to be taken. Once I have those specific liquidity levels, then only then do I start considering trades. And that's why you need a really clear strategy with those really clear rules. You know, the whole entering the market and exiting the marketplace, that's the more subjective thing where, you know, you're waiting for particular entry models or whatever it may be. But every trader needs to have specific areas where they will or won't trade from. And really, you know, I think when I first started trading, the way I used to look at it is, well, I'm going to look at the marketplaces, I'm going to see whether it's bullish or bearish, and then I'm going to take a trade. I'm going to find some sort of entry model to take a trade. Nowadays, I look at it completely differently. I go to the market, I'm looking at, you know, areas that I'd like to take trades from, and then I wait for price to get there, and then I wait for a particular reaction from that area before I then take a trade. And it's that filtering, that selection process that's so important, and I think sets apart the more successful traders from the constant losers, sadly.
I couldn't agree more. That's exactly what I do with the Elliott waves, the patterns, and then obviously the weekly, daily session liquidations. All of that, I just put into a big cocktail and just wait for clarity. In terms of dollar CAD, short, basically it's bullish, and if I were to take a trade, I mean, it's taken out that high, so it's confirmed the new Elliott waves. Let's just say there is a pattern here, 1, 2, 3, 4, 5.
Would you ever enter on like the 4?
The 4.
Yeah.
There needs to be a confirmation pattern near the 4.
Oh, so I suppose the 4 is your second touch on the lower trend line, so you don't really have a confirmed one until you have the reaction, right?
Exactly, but I do have a way of entering 4 using the indicator, but there needs to be liquidity. At the moment, if I were to take, I wouldn't take 4 because there's no liquidity here. This is momentum.
Yeah.
So I need it to be like a little. I call it the V. Just if there's like a little V there somewhere, or / liquidity, whatever, then yeah, it's valid. Most likely what's going to happen is it's going to pull back. Once it pulls back, the Elliott waves are going to be updated accordingly.
Yeah.
And then this is the trade I want to take.
Yeah.
After everything that I said, right? The Fibonacci on the daily, this is what I like to have. But that's not really ready yet. So if I were to take a long, it will have to be at least below this area. Then at least you can hop in with the trend and then go long. But for now, there's nothing that I can see until it comes up here. That's what I'll be looking at. So that's what I've got for dollar CAD. In terms of forecast, I kind of like to play chess with the markets. Don't get it right all the time, but in terms of probability, if I do catch a short here, or even if I miss it and it does drop from there, the next area of interest, 2 things can happen. Either it will reverse from this pattern, or it will basically just plummet and confirm. Remember what I mentioned before, where there was a liquidity error here on the weekly? That's been liquidated, meaning this is a good magnet. So it could just completely drop and go down there. So that's like one scenario. The other scenario is it just updates the pattern, right? And you just go with the Elliott waves. And then eventually, it will come to Elliott wave 5, which is in confluence with the major liquidity area.
Yeah.
So that's what could potentially happen. So one of those 2 scenarios is very, very highly probable. For this to go long from here, very unlikely. Because in terms of the Elliott waves, I can't see a reason for it to go long. Hold on. No, I lied. Hold on. Maybe we could go long from here because of this this pattern here. It could go long from here, but because of the information here, I would be favoriting the short. But that is a probability. So that's what I've got there.
Nice.
What else is there? I think is that it for me. Oh, Aussie. Aussie was actually really clear.
Hey, how lovely was that Aussie long from last week as well, by the way?
That was quality, man.
I don't trade Aussie, but we flicked onto the Aussie chart, didn't we? I think someone maybe asked for it. I think one of you guys maybe in the chat asked for.
Yeah, and then it paid out. I remember you got triggered in. You saw some drawdown the next day.
Yeah, we looked at it, popped the trade on us, and I think we were kind of analysing at the same time, saying this looks like a good position. It ran to like 4R within about 15-20 minutes of the live stream finishing. Beautiful little trade it was.
I love those trades. I like that. That was a fantastic trade.
I wasn't in it though. I don't trade Aussie dollar.
You gave a professional signal to the traders. I wonder who caught it. Nobody has even said thanks to you, man.
I know. I got a few reactions in the Discord, which was nice. Did anyone catch Aussie dollar longs last Monday? Did anyone take the signal? Those of you on the chat, let us know if you took it. It'd be great to hear if you took it or if you got any profits out of it. We are at 100% win rate right now.
Quality, man. Quality.
3 signals, 3 wins. Love it.
Yeah.
Wish my account was at a 100% win rate. It's definitely not.
Trust me, I know. Demo trading, forecasted, and
I had a rough week last week. Hit about 40%, which is fine. Look, still made some money. It's all right. Yeah, it's not the end of the world, but I'd love a little bit more. It'd be nice to have like 60%, 70%.
Yeah, no, 100%. My last one would be Aussie. I've got there's 2 setups. I've got the B50 and I've got the indicator that I use for this point of interest. But you can see there's a clear liquidity here.
Mm-hmm.
So I'll be expecting price to go down here and then a reversal up here to grab that liquidity. Plus there's equal highs and everything. So I think Aussie for me looks really clear, very, very, very clean compared to Euro with too many contradicting patterns. So Aussie looks good. So Lawrence, if you're watching, that's a good one. And let me just look at GU for Lawrence. I looked at GU this morning for the community, Lawrence, but I didn't trade it, or I'm not going to trade it because there's too many contradictive patterns. So you see that? It's messy. So technically, I'm bearish on the dollar, and obviously with this liquidity here, GU would make sense for it to go long. Unfortunately, we also have this pattern here. 1, 2, 3, 4. You've got your fake out, the boomerang, right? So technically, this should drop down towards this trend line or this Elliott wave 4. So that pattern is bearish. The current pattern here is bullish. And then we've got this pattern. 1, 2, 3. That's also bearish. And it has taken out this liquidity. So G for me is it's contradicting patterns, but I'm not going to trade it. But that's my forecast, expecting it to go long. And if it doesn't, and I'm wrong, obviously this will be the target if it does actually drop. That's it. But if you look at the Aussie, there's not really any contradictive patterns. Everything's pointing to the upside. Okay. Thanks. Yeah, confusing. Yeah, fair enough. But that's it. Has anyone got any questions?
Just quiet out there today. Got 90 of you on there, and very, very quiet. Very, very quiet. I've not got much on my charts really at the moment. Similar to you, really. I don't trade as many pairs as you. In EU is my main pair, so I'm just kind of watching and waiting at the moment too.
Fair enough. I think all I can say is for everyone, just wait for this area of liquidity on the daily to get filled. That's my personal game plan. If it drops, whatever, but if it does start to rally, then I'm very confident there'll be some form of a reaction. At the moment, right now, it's in the middle of no man's land, but I'll definitely be favoriting the long, short term towards this pattern over here, this third trend line. It's a magnet towards that area anyway. You can see there's a bit of a parallel channel anyway. So
yeah, nice.
To be fair, that's it for me.
Yeah, so I've got. I'll just show you what I'm looking at the moment. So obviously Diego and I we trade similarly, but kind of differently. So different strategies, but we're both kind of looking for the same sort of things. So very, very similar to what Diego said. Dollar's at a decision point right now for me. I've got some really key liquidity here that is probably going to cause a reaction. But for me to, really justify sells.
What time frame is that? Daily?
Is that daily? This is daily, sorry. Oh, sorry, I didn't realize you're talking to me then. Yes, daily time frame.
That little high that you've got, I kind of just noticed, I missed it on my chart, but that high that you've got, if that breaks on the left, all those momentum candles, I see it as no traffic.
Yeah.
So price will just slide right through it.
So what I quite like about it, so I think sometimes, we look at this, so we've got a daily high, that's the orange line there, and then we've got a weekly high, which is the red line. We look at these highs and lows, and we kind of, sometimes we add the same weight to them as we would do, we add the same weight to them whether they're weak or they're strong. These are weak highs for me, and the reason why is because the highs that generated the moves down, so the orders and the sell orders that generated this move down weren't strong enough to create new structure. So if I had that move, I would have a new trading range that I could be looking from, and therefore the liquidity above these levels now, well, firstly, price would be a lot lower down already, and therefore struggling to get back up to here. But look, we've had a couple of bearish candles, and I think sometimes people that when they, you look back at the price action for last week and you say, right, it was a really bearish week. Yes, it was a really bearish week, but then prices, not really done anything else other than that little push down. And then when you look at it in the grand scheme of things, you've got 2 bearish candles amongst a load of bullish candles. The majority of momentum, the majority of orders in this marketplace right now is bullish. Now, obviously, higher time frame, that's a different story. Obviously, a very bearish market on the dollar. But for the short term, very similar to Diego, I want to be getting up to this area. I want to be taking out either the liquidity above here, which is a major level for me. So I mark that on as a major. And you can always spot the major levels, because if you zoom out, okay, so if we have a look at, say, the daily chart, they're really obvious, significant highs and lows. It's a significant high, that is, because it generated a move that broke structure to the left. So that's a significant high and significant liquidity level, meaning that price is either going to come in here, muck about, and then drop, or the same thing's going to happen, but it's going to do it above price. So, either way, you've got a really significant area where price is ultimately drawn to. Failure to make a new low. We've got liquidity that can be fueling moves. We might get a little bit of a pullback when we get in here. But that's good for me, because then I can enter off that range, draw that range from here to here, maybe a bit of a pullback here. So, that's why, similar to Diego, I'm a bit confused as what I want to do really from here. But looking at the price action right now, Monday's been really bullish. We're coming into these liquidity areas now. So these are areas where we could start to see price, making some sort of movement from. And we just need to watch and wait right now. What I would love maybe a short setup like that, possibly to take out some liquidity down here. It might not reach that far. It depends really for me how big the range becomes, because if the range stops there, then I only need to come down to the 50% zone. Okay, I've only got to come down to this bottom half, which is my discount zone, because that then gives me my liquidity to take it back up. If price keeps pushing and goes up here and then reverses, then obviously my discount zone is a little bit further down. So it really depends on kind of how this bullish move finishes. If it does finish, where it may be more confusing is if we then start getting a push down from here, showing that this move is a weak move, then that could then fuel further lower prices. So if we don't get any continuation from here, but then we start getting bullish price action to take out that low, then that would actually indicate that we're probably going to be going bearish further. So price is at a decision point at the moment, and I think it needs to make a clear bullish move above these levels so that we can then trade that new range accordingly. For me to confirm a new range, I need that second breaker structure, which will be the breaker structure above this red line here. Okay, that would be the second breaker structure for me. But you can get early warning signals of change of direction if they fail to make new lows. Okay, and this move was a failure to make a new low. So for me, that's an early warning signal that we could be pushing higher. But I haven't got confirmation that we are going to push higher. Okay. So yeah, it's just kind of sitting and waiting on my hands at the moment. Gold is again a difficult pair to kind of follow at the moment. So if we look at the weekly candle, you can see it didn't really do much. So we can mark on our high here, which is our weekly high, and then our low there, which is our weekly low. Looking at the daily, lots of kind of there's not really any new structure being created. Therefore, you kind of have to trust that it's still bullish, because the most recent structure on the 4-hour would have been here to here. Yeah, and then structure's not been broken. Structure's not been broken since the 15th of August. So the last bullish range was put in on the 15th of August, finished on the 20th of August. Since then, we've had no external liquidity sweeps other than kind of internal. So right now, gold is, it's not a pair that I want to be trading. And I'll show you why. If you look at the highs and the lows that are being created, you've got this wedge formation happening. Okay, and that for me, that kind of flat flag shape, flat channel shape for me, that doesn't. There's not much in there I want to be mucking about with. Where I would be taking trades is if we get highs and lows being swept. So either one of those weekly highs or lows, if that gets swept, then I've been happy to take a trade all day long. But in the middle of this is where traders will often get stopped out, because you try and trade this like really, messy internal price action. Every now and again, you catch a nice trade like that sell after news on Friday. But this morning, let's say you try to take a sell position here, you've got no guarantee it's going to go sell because, it hasn't made a new low. So is this buying back up? It's just really confusing price action. So gold for me as a day trader is a difficult pair for me to trade right now. It's not one that I'll be rushing into. I've set my alerts on the weekly low and the weekly high from last week, and I will wait until one of those gets swept. If it gets swept and then gives me a setup, great. But with what we've been discussing about the dollar, does it then continue on? Well, we don't know. So I am personally expecting quite a quiet week until we get some nice structure for me.
Fair enough. It might as well wait for Wednesday.
Yeah, definitely. And on that note, for me, I have a couple of really simple trading strategies for trading the news. So there's two possible options for me. Okay, reversal or continuation. Okay, and there's two.
I just realized I double booked with something.
Okay.
So I'm gonna make a move actually.
Yeah. Okay. You jump off. I can finish off. No problem, dude. Good to see you, man.
Take care, man. See you next week.
See you later. So we've either got reversal or continuation news that we can take trades from. So what we are expecting is a consolidation of price before any news event. Okay. We normally then have an initial liquidity move and then the big news move. Okay. In a reversal based news, you often get this kind of slow pullback that ultimately takes out the low that was just created by the initial news move. Now, what I do when this happens, I mark this on as what I call a trap. That's the trap. Usually, this move will take out liquidity to the left. Okay, so you can mark on the liquidity points, and usually there's a liquidity to the left that is taken out. Once you see that bearish structure and you've got nice confirmed bearish structure, what you're doing is you're taking a sell in this scenario, which you'll hold down for my first profit target off at the high of the trap. Take 80-90% off there because you've got no guarantee it's going to go much further. This could, of course, be a demand zone that could cause price to go higher. Doesn't usually happen, but it can happen. Okay, and the alternate that usually happens on really weak news, by the way. Strong news, you normally get a blow of the trap because there's loads of liquidity sat beneath there. Think about how many people try and trade the news. They try and get into the trades and they buy up there, place their stops below there. They're not expecting price to continue down, but obviously it will often do that. The alternative scenario, okay, with these, I'll draw out again, it's easier. The alternative scenario with news is you will have your initial sweep, okay, then you big move up, and then often it will close maybe above a liquidity point, okay, and then it will just continue pushing up. So in this scenario, you either have liquidity much higher, which it's targeting, or potentially it closes above a liquidity, and therefore it's not clearly rejecting like in this scenario. With these ones, these are harder to trade because you have to take much riskier entries. Obviously, you're taking a trade like that, and you've got no guarantee that low there is going to hold. Obviously, you hope it does, but you've got no guarantee that low there is going to hold. So it's a little bit more risky. The only safe trade really in that scenario is placing your stop below the initial move. Then you obviously massively reduce your risk to reward. But those are my two trading setups for news, and they occur almost every time, just to reassure you. Almost every single time you go into the marketplace and you have news playing out, then one of these two scenarios will often happen. So I'll talk you through and show you what happened on Friday. So if we look at Friday, just going back to Friday's news, okay? So if you look at this move on NFP Friday, okay, very, very simple. We had a really, really big move here, okay? And it's not the best of traps. We would normally like these zones to be a little bit smaller. So we mark that one on like that as our trap, okay? Now, usually it will take out some form of liquidity, which as you can see, it's taken out the daily high there, okay? And what we're wanting price to do now is we're wanting price to give us a rejection and a reversal. So we wait for structure to come into the marketplace and start confirming bearish structure, which you do here. You can then enter on things like engulfing patterns like that, get yourself out a nice 5R. You could enter with a safe stop above maybe some previous structure, still get out about 2.5R out of that one. It's up to you how you trade it. Usually, this is not very manipulative because it's quite slow. You don't often get these kind of moves, okay? You don't often get these kind of moves. It normally just kind of meanders all the way down. And, you know, what you can then do is take your profit off below the trap, because as you can see in this scenario, there's no guarantee you won't have an opposing move. The trap is where the liquidity is set. Once the trap is blown, the liquidity has been taken, and you can see bullish structure comes into the marketplace. You know, you could have sold down here and you could have bought back up. I didn't actually catch the sell, I catched the buy. I entered the buy here. I did end up getting a break even on it. It did take me to target, but I was holding out for the high there. I didn't get that. I got stopped out for break even, frustratingly, because it came back down at about 5, 6 o'clock and it took me out. But yeah, that's how it goes sometimes. I didn't lose any money either, which is, you know, good. And if you go back and you look at various news moves in the marketplace, okay, you'll see they have one of these two desired effects. So news came into the marketplace here. This was Thursday. I can't remember what it was on Thursday, but it was news. That's our trap. We always mark on the trap whether it continues or whether it doesn't. Okay, we've got the low of London here, which it took out. So the low of London is here. Okay, significant liquidity point in the marketplace. The reason why that's a significant liquidity point is because it took liquidity to the left before price ultimately continued on. So we wait for that liquidity to be taken, wait for clear bullish structure to come to the marketplace. Beautiful trade there. You could have entered like that, stop below the low. First target up here at 4R, that would be your first profit target, or you could have targeted this high to the left for 3.2. Either one of those perfectly reasonable, and then leave 10-20% on until the final trap is taken. Okay, so really nice reversal news entry. They'll often happen within the first half an hour, just so you know. So the news hit at 3 o'clock, the reversal hit at 3:48. So within about half an hour of the news, you can normally start to see what price is likely to do further. Look at this example here. Not the cleanest examples, didn't carry on forever and ever and ever, but it illustrates the point we spoke about earlier. So in this scenario, the liquidity was taken very clearly. I'll mark that on so you can see it a little bit clearer. The liquidity was taken very clearly. Price closed way above the liquidity, meaning that there was no hold of price. Price didn't hold on. Now, getting into this trade, as I mentioned to you earlier, is a little bit more difficult. So you've got to, you know, maybe use an engulfing pattern. Your stop is a little risky, and then you could hold up until maybe you take out some liquidity to the left. Not the best of examples here, because obviously, you know, the confirmation of the continuation was a little bit, you know, too big. You might have been able to get in on one of these little pullbacks like this, but you know, you were ultimately limited this trade by your profit. But the theory of it played out really, really nicely, as you can see. How do you guys at home typically trade news? What are you looking for? News? Are you trading before news? Are you trading after news? Let me know, and I can kind of go through a couple of examples for you. Also, we've got about 10 minutes left today, and as I'm on my own, I'm happy to go through and give you a bit of analysis on any pairs. So if you're watching in the chat and you'd like to put your pairs in there, I'll spend the last few minutes doing a bit of forecasting and analysis for you, which could either, you know, confirm, verify, or counter your own analysis. This was a 1:30 news on Thursday, the 29th of August. This is a really good example of a continuation news. So we get that as our trap. Okay, our liquidity is below. So initial move down 130, and then you don't really get any kind of, so price hasn't swept liquidity, therefore my reversal entry is not on. Price then comes and takes internal liquidity here, has a bearish break, and then pulls back into what looks like this order block just up here. Okay, so for me, I'll be seeing that as a continuation news. You could have entered here, after the engulfing, stop above there, a little bit safer as this entry. First profit target would be that liquidity low there. So I'll be coming out the marketplace with nearly 3%, and it ran on to some sort of liquidity to the left, whatever it may be, and ended up being a 6R trade. So the key to trading the news is, how does it react to the news firstly? So what direction does it move in? This market is clearly quite bearish. You get another really nice continuation news there, or you actually get two. You get a pullback, which will have been after a liquidity level. Let's have a look. Gone. Okay, so yeah, so we've taken out all this liquidity below here. Probably some more down there. Yeah, so liquidity low there. That'll be some sort of daily liquidity. Okay, taking all that liquidity out. In this example, more difficult to trade most certainly, and I'll show you why. Okay, when you have these massive moves like this, okay, just look at this move, it is like literally humongous. When you have these massive moves like that, expecting price to come all the way back up to your trap, which will be up here, is unlikely. Okay, so if you were taking the buy here, you need to understand that it's probably going to take out some internal liquidity like that did, and then start breaking down, which ultimately it ends up doing. So you need to be in and out of this. This is why 2R, 3R at the marketplace, 80%, 90%, you're pretty much done for the day then. At 1% per trade, that's 2.7, 2.8%, you're laughing all day long. With this example, because the news move was so huge, the likelihood of price coming all the way back up there is less, especially when you've got a bearish marketplace anyway. Okay, very bearish marketplace, as you can see. So you have to be on your toes a little bit in a situation like this and watch the price action. As soon as price starts, making this kind of arcing shape, that for me is when I start thinking, you know what, maybe now we are going to start pushing bearish, and it then very clearly does, as you can see. So whenever you get that kind of that arcing shape to price, that should always make you just scratch your head a little bit and kind of wonder where price might be headed, because that kind of exchange, that's like your Wyckoff theory, that's your buyers turning into sellers. That slow movement from left to right when you've got the arcing motion will often indicate to you that you're probably going to be changing direction at some point. It very rarely does this and then pushes up. Okay, most of the time when you get that kind of arcing shaped price, the one here, look. Okay, most of the time what ultimately it's doing is exchanging hands. The buyers are becoming weaker, the sellers are becoming stronger, which is why that momentum changes. Okay, so be conscious of that. So like I said, we've got a few minutes, guys. If any of you have any pairs that you'd like me to look at for you, I can go through that with you now. If not, we can have a look at GJ. There's 100 of you guys on at the moment, so just pop in the chat any pairs that you're trading this week, what you're looking at, what you'd like to look at. Pop your chart pairs in the chat now, and I'll go through and do some analysis for you. Got a couple of minutes left. 105 of you. It's our biggest turnout on the live stream that we've had for CTI, which is fantastic. So thank you all for watching. I hope you're learning a lot. It'd be great to have some pairs for analyze. Like I said, I've got a few questions. A few pairs for me to go through and go from there. But in the meantime, whilst I wait for you guys to comment, let's have a look at GJ. Let's go through GJ and see what GJ is up to at the moment. So, weekly chart. Obviously, particularly bearish right now. So we know that about yen pairs. We know they're particularly bearish. We've got our weekly high here, which we mark on. We've got our weekly low down here, which we have already taken, as you can see there. But we look at that. We delete that line now because that line has been taken. That liquidity has been taken from the weekly low. We mark on our weekly dead. Okay, so that goes on there. And I just put a little note in the corner just to say that my last weekly candle was quite significantly bearish and it swept buy-side liquidity. So that's just a little reminder for me every single day this week that momentum is particularly bearish on my yen pair. Last week we were particularly bearish, clear bearish candle with buy-side liquidity taken. So, for me, I don't need to be rushing into buys basically. Next thing we do when I set up my charts, I'm just tightening up that weekly sweep. So that goes back to there. And I'll do that on all time frames. When you obviously draw on the weekly and then drop down to the lower time frames, the drawings appear much bigger, of course. I'm going to mark that on as weekly dead, put it at the top, and just update my template, weekly dead. Where is it there? Dead weekly. Okay, so I know now that's my liquidity sweep. That's my buy side liquidity sweep, so I can keep an eye on that. Nothing really to shout about on the daily, other than the fact we've just taken out daily liquidity. I will mark out some recent daily highs as well. So just for areas, if price does get back up to there, areas that I could be taking sells from ultimately. I'd only really be trading this marketplace bearish right now. Multiple bearish candles, and I also mark on the previous daily candle, which was also bearish. Did it take any liquidity? No, it didn't take any liquidity, so it just gets left on. For me, then, I look at my 4-hour range, which I already know will be bearish just from the candle structure. So I put on my 4-hour range. That goes from here to here. Okay, tighten up my weekly line again. And then from there, I'm jumping down to the 15-minute time frame. So what I'm looking for here is I'm looking for some sort of shift now, really. So I've taken out the weekly low, but as you can clearly see, price wasn't too fussed about that weekly low. It's taken it and it's caused a reaction. I've taken out internal liquidity now. We potentially could be getting a nice short setup here, potentially. The reason why I say potentially is because it's Monday. I don't want to be rushing to trades particularly. And, right now on this market, we are bullish. So, I don't want to be jumping into trades immediately as soon as I see one bearish push. Even though it might be the right thing to do, I need a little bit of, I need a little bit of momentum. I need to see that exchange, right? So I need to see the exchange from buyers into sellers. Now, the safest way to get into a trade like this, often on the 15-minute, it can be a little bit clearer. It's just waiting for some new structure and then trading off a pullback. So many traders try and catch the reversal all the time that they actually get stung on pullbacks, because this could just be a pullback. This could just be a pullback, take out the liquidity there to push back up. And the amount of times I've been caught out on trades like that. In terms of liquidity within this 4-hour range, we've obviously got an order block up here, which we can mark on. It's a good order block as well because it took out liquidity to the left. So that's a really attractive area for price to come back to. But now we are in this equilibrium area. It doesn't actually have to come up any higher. So GJ right now is looking pretty bearish. It's just a case of waiting and seeing what it does from here. If this was just one push back and then we had this setup down here, I'd be happy with that. But because we've had this one push up, just taking out liquidity here, okay? So that gives us a true breaker structure. Okay, so that gives us a true breaker structure. We've then had, apologies. That gives us a first breaker structure, okay? We've then had the second push, that gives us our true breaker structure. So that now confirms, at least on the 15-minute time frame, that we are bullish. Fortunately, what that means for us is we need to now wait until we get a breaker structure down to the bearish side before we can then start selling, okay, for us to confirm that. And what I think might actually happen is we get that sweep, which kind of, you can see how bearish it is, but we get that sweep. And I think we might actually have quite a nice position buying back up, potentially all the way up to that order block up there. So I'm actually biased long on GJ right now. The reason why I like using 4-hour and 15-minute is for a couple of reasons, really. The first thing is if I use the 4-hour, it gives me a really nice kind of halfway between really high time frame and kind of medium time frame to trade. I really like that. That's the first thing. It also gives us really reliable ranges to trade from. Okay, the 4-hour ranges are often particularly reliable. Second thing then, if using the 15-minute, is if I'm using 15-minute liquidity areas, they move slow enough for me to be able to mark on, and they are higher time frame enough for me to catch a lower time frame entry. So if I get a sweep down here on the 15-minute, all I've got to do then is drop down to the 1-minute and then wait for some bullish structure. And because the 1-minute is obviously 15 times smaller than the 15-minute, Okay, one 15-minute candle could give me that, but I've got 15 minutes for that pattern to play out, which gives me plenty of time. So many traders trade such low time frames that they have no time to really assess and analyze. You know, yes, we've had this bearish correction, and yes, this might continue. But right now, for me, this market is bullish. And you see how it's struggling to get down to this liquidity level? That indicates to me that there are still buyers in the marketplace. We drop down to the lower time frame as well. We've got imbalance sat above here. So we've got imbalance there. We can mark that on. Okay. We've got imbalance there. We've got a nice little order block here as well, which we can mark that on. Okay. So we've got an OB there and we've got imbalance. So we've now got a really key area that we could actually be looking for a long from. It's really simple now. We wait for price to get into this area, okay, to sweep the liquidity. Now, the way I look at this combination is, so if I'm looking at liquidity areas, okay, for me, my most important liquidity area is an external low. That for me is my absolute favorite. It's the one that carries the most weight and has the most liquidity. The way I look at an area like this is if I have order block, clear and defined, which broke structure, yes, that's the big tick. If I have imbalance that's left untested, that's the second tick. And if I have resting liquidity here, that's third tick. For me, each one of these has a third of the liquidity as an external level does. So if I get 1, 2, 3, and price comes in and reverses from that, that for me is just as much of a good area to enter from as an external liquidity sweep. And the beauty of the way that I trade is I'm not needing to rush this. I don't need to enter right now. If it goes off without me, it will give me structure that I can trade from. Okay, it will give me structure that I can trade from and then enter a position on. So I'm happy with that all day long. I don't need to rush into this trade. I can wait for price to come nicely into this zone and give me a setup. If it gives me a setup, I take it. If it doesn't, it doesn't. So that's kind of what I'm looking at for GJ right now. It's just a case of, watching and waiting and seeing what price does from here. If it doesn't respect these areas and just blows straight through, my entries I'm looking at the 1 minute time frame anyway, so I can catch a short on that if it gives it. Because right now I'm waiting for price to come down. These are 15-minute liquidity areas effectively. Wait for price to come down and just show me what it wants to do from here. And I would be saying, looking at this, the likelihood is, just based upon current structure, is that we're going to push higher, at least take out the high here. So I'm long on GJ right now, short term. I'll keep you posted if I do take a trade. I wouldn't say it's ready to go just yet. If I do take a trade on this, I'll let you know in the chat and we can go from there. All right. So guys, thank you for joining today. Great to have so many of you on the live stream. It's lovely to see you all. I will be jumping off now and we'll see you next week. Thank you so much for all of you who turned up. Thank you so much for all of you that have interacted with us today. Don't ever be afraid of talking to us. We're here to help you guys, and feel free to utilize our skills and our experience as much as possible. That's what we're here for. So yeah, any questions and queries, as always, reach out to me on Instagram at Strong Money Forex. I'm always happy to help new students with any questions or queries that they have. You can also contact me on the CTI Discord as well. The name's the same, it's Jack or Chris at Strong Money Forex. So any questions, any queries that you have, reach out to me at any point. I'll be always happy to help. So yeah, cheers guys, thanks for tuning in, and I'll catch you all soon.